Well, with markets, and hitting new lows and oil prices rising, it's hard to think of an optimistic scenario at this juncture. But there is one, and let's explore that. For example, if there was a ceasefire in the Russia-Ukraine conflict, Ukraine was seen as maybe a neutral country, similar to, say, Switzerland. Sanctions were taken away, a peacekeeping force. That type of optimistic scenario would lead to a number of factors. One, that commodity prices would fall because the supply chain problems that we're seeing at the moment would disappear. And all the kind of financing, economic war the West has been waging on Russia will also kind of move forward, and those sanctions would be taken away. So that optimistic scenario means that markets would rise very, very quickly. And obviously, the next stage would be how quickly, interest rates would rise in, say, the West. And we think that'd be a lot slower to let the economy kind of recover a little bit from these external shocks. So whilst that's an optimistic scenario that all markets rise, so if we take India, the Nifty would rise very, very sharply. But I think thereafter, we have to look at some of the new trends which would emerge. For example, we know that in, say, Europe, defense spending would increase significantly, not just for Europe, but I think around the world. So defense spending is one new theme that probably was not thought about 2 or 3 months back. Renewable energy will definitely be accelerated by all countries. But I think the other areas which we need to focus on going forward is those sectors where the supply chain security will be important to countries and companies. And therefore, I think a lot of governments and companies will focus on those areas where there's a supply deficit within their own country. And that CapEx cycle could really kind of accelerate both between governments and corporates and lead to the next leg of the GDP growth going forward.